Okay, Norm, let's talk about the specifics of the new revenue recognition standard. Tell me, what, if anything, is fundamentally different about this new revenue recognition standard?
The standard is not fully principles-based as perhaps international regulators would like, but what they do is they spell out performance obligations very clearly, specifically with respect to contracts. So what they're saying is that under this new standard, you don't recognize revenue until you've achieved contractual performance obligations, which may be at a point in time and may be over an extended period of time, but you've got to actually point to and document the achievement of those performance obligations in order to justify taking that revenue. So in the case of that bill and hold inventory, if you don't have an agreement in the contract that you're holding it on behalf of the company that now has title to that company, you don't have that revenue. If you're taking revenue on electricity that you haven't even generated yet, you haven't met your performance obligations. So they're getting down to a very clear principle that companies have to assess. And they have to assess it by actually referring to their contracts, seeing what's said in the contracts, and of course hoping that the contracts are going to be clear enough.
Start with U.S. GAAP. How is that RevRec standard structured?
Okay, so it's called Accounting Standards Codification 606, Revenue from Contracts with Customers, and this takes out just about all revenue recognition under U.S. GAAP. It doesn't include what we would refer to as other income, which is outside of a company's central operations. So if you're Office Depot and you're currently shrinking and in the process of shrinking, you're selling off some of your old stores, that's a gain or loss on sale of real estate that has nothing to do with the staples and paper that you've been selling. So that's out of scope for this. You're looking at your normal business operations, the revenue that you achieved by fulfilling contract obligations under your contracts with customers. It does not include most of the transaction-specific advice that we see under those 100-plus standards that exist. But it does include items that are central to a firm's central operations.